Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be doing a brief stock analysis on Texas Instruments stock, ticker symbol TXN. So most of you probably know a little bit about this company, but basically in case you aren't aware, as they say on their investor relations page, it says we design, manufacture, test, and sell analog and embedded semiconductors in markets that include industrial, automotive, personal electronics, communications equipment, and enterprise systems. So definitely in the heart of the technology industry and the technology sector, mostly within the semiconductor field, I guess. Obviously they have the calculators that are pretty popular. I do love my TI-89. It can do a lot of really cool stuff. But we also want to look at some of the financial metrics. So we're going to look here at their third quarter 2021 financial results. So this was released on October 26th, 2021, and they reported revenues for the third quarter of $4.64 billion, net income of $1.95 billion, and earnings per share of $2.07. So their revenue increased 22% from the same quarter a year ago due to strong demand in industrial, automotive, and personal electronics. In their analog segment, their revenue grew 24%, and in the embedded processing segment, that revenue grew 13% from the same quarter a year ago. They said their cash flow from operations was $8.5 billion for the trailing 12 months, which they say underscored the strength of their business model. Free cash flow for the same period was $7.1 billion and 41% of revenue. This reflects the quality of our product portfolio as well as the efficiency of our manufacturing strategy, including the benefit of 300mm production. They also returned $4.2 billion to shareholders in the past 12 months through dividends and stock repurchases, which we can look through a little bit more in a few minutes later on in this report. And they say that their dividend represented 53% of free cash flow, which underscores its sustainability. And in September, they announced an increase for that dividend of 13%, which is definitely exciting. And they said their fourth quarter outlook is for revenue in the range of $4.22 billion to $4.58 billion. Which is basically a little bit lower than the third quarter, and earnings per share between $1.83 and $2.07, which is a little bit lower than the third quarter as well. And it says we continue to expect our 2021 annual operating tax rate to be about 14%. So this is just a summary here of the earnings. Hopefully it's not too small. Hopefully you can see that. But their revenues for the third quarter were around $4.6 billion compared to $3.8 billion last year. And then operating profits and net income here, $2.3 and $1.9 billion respectively. Nice increases from the prior year. About 44% increase in the net income, which is pretty nice. And then earnings per share of $2.07 compared to $1.45 the year prior. Also, yeah, cash return here. So in the third quarter, they paid $942 million in dividends and repurchased about $139 million of stock. So not that much stock repurchase. For a lot of companies, the stock repurchase is greater than the dividends, but that's interesting to see, I guess. So the total cash return for the third quarter was $1.08 billion. And then for the trailing 12 months, basically they returned $4.16 billion, which looks like it was a little bit of a decrease, or a substantial decrease from 2020 trailing 12 months. And I would suspect that's mostly from, stock repurchases, because they are continually increasing that dividend. So that dividend amount is not going to go down unless maybe they had some sort of special dividend. But likely it is some sort of share repurchases that they probably had at the end of 2019 or early 2020 before the pandemic. And those maybe got lowered some during the pandemic, and that's why these numbers are a bit lower. And also we can look through some more of the, income statement here. Again, we're seeing revenues, cost of revenues are up a little bit, and I haven't done the calculation, but I would guess that the percentage of revenue that, is the percentage of cost of revenue versus revenue is a little bit lower this year than last year, but I have not done that calculation just by looking at the numbers and guessing, I guess, what I'm saying. But obviously net income, again, of $1.9 billion compared to $1.4 last year, and then earnings per share of $2.07 compared to $1.45, like we said. And they also have some balance sheet info, which is super great to look at. Current assets, awesome, are at $13.6 billion, which is honestly fantastic compared to, the amount of current liabilities we see down here, which is only $2.4 billion. and that is actually greater than the total liabilities of $11 billion. So let's take a little bit of a closer look at that. They have about $5.7 billion in cash and $4.1 billion in short-term investments. So that's the majority there of their current assets. So it looks like they increased that cash pretty substantially from the end of September 2020 to the end of September 2021, pretty much doubled that amount. So that's pretty interesting to see. And then the total assets here, let's see, where is it listed? Right here is at $23 billion. And next, looking at the dividends here, we can see the current yield is around 2.38%, which is, pretty solid for a dividend company. Obviously, nothing super high, but they are a tech company, which generally pay lower dividends, if any. So it's super awesome, I think, to have a yield of 2.38%, especially when we consider the 5-year dividend growth rate of around 20.75% and the payout ratio of 57%, which is very healthy. And I think they said that free cash flow payout ratio is 53%. I believe Seeking Alpha calculates the payout ratio based on earnings. So it looks like those numbers are pretty similar in the 55 to 60% range. And they have been growing that dividend for 16 years consecutively, which is pretty awesome to see. Obviously, they're a tech company, so you wouldn't expect them to have a super long history of growing that dividend, but 16 years is solid. I can definitely see them becoming a dividend aristocrat within the next 10 years as they continue increasing that dividend. And looking at their PE ratio for a bit of evaluation perspective, we can see right now it's around 24.8, which does not seem that high to me. And you can see that, over the past 3 or 4 years, they've been in that range of, 20 to 25 for their PE ratio. Obviously, they were down here around 15, 20 for a little bit in 2018, but generally over the past 3-4 years, that honestly isn't too high for their PE ratio. Looking back, obviously, in the 2010s, they were more in the $10 to $17 range, or maybe $14 to $17 range. So it is a little bit elevated, but you can see they have been growing their earnings pretty rapidly over the past 10 years, I would say. And in the past 12 months, they've grown them very rapidly. I would call that very rapid growth of the earnings. But comparing that to the technology sector as a whole, remember it's 24.82 for Texas Instruments right now. And Texas Instruments is obviously in the technology sector in the semiconductors industry. So we can see the sector as a whole has an average of 29, and the semiconductors industry has an average of 27.8. So Texas Instruments is below both of those averages, which could indicate they're a bit undervalued compared to the sector. Looking historically, obviously they're about in line with where they've been historically over the past few years at least. And also we can take a look at a chart to maybe get a little bit better of an idea as well. And we can see right now they're around $193 per share, which is sort of near what you would probably call all-time highs, which looks like they're around here, maybe $203 per share. Back here we were around $197. I really don't see anything higher than that, which is pretty crazy considering pre-pandemic they were down here at $134, and then obviously they dropped in March of 2020 to maybe somewhere below $100, which is pretty astounding as well. But just to think, a year and a half ago they were 134 and now 193. It's pretty cool to see that growth sort of take off. Right now, obviously they are just above the moving averages. I forget exactly which ones I have here. I think it's the 20, 50, 100, and 200. So they're above all those moving averages, but they're pretty close to them, and it's kind of converging towards those moving averages. So might see some kind of movement sometime soon. But for me, I think that I would like to see the stock a little bit lower. Obviously, I don't really expect it to drop all that much unless we see some sort of big market correction, just because they've just been growing steadily and they don't have a lot of super big drops. It looks like they had one here, on earnings. So is probably why there was that drop there, because that's right, that lines up with the earnings date. And again, here they had a drop at earnings, so it looks like they're sort of volatile around earnings. But aside from that, they don't really have any drastic moves. It's just kind of slow and steady up. So I would really like it somewhere around 180 before I started buying. But right now, I don't think that price is too bad either. I think that it would not destroy your portfolio if you bought at these prices. I guess I would definitely like 180 though, and I think 170 would even be preferable to that. But I would definitely like to hear if any of you guys do own the stock. It's definitely a popular company and they have a lot of business, but I don't see as many people talking about the stock. I think it is a fantastic stock with a great dividend history and dividend metrics such as that dividend growth and the dividend yield, which are both pretty good, I would say. So let me know if you do own the stock and what price you want to see before you would buy. And I just want to thank you guys for watching to the end of the video. I will see you in the next one.